Hey everyone, it's October 9th, 2024, and we've got some big moves in the stock market today. Whether you're trading or just keeping an eye on your portfolio, it's time to dig into what's happening and what could be on the horizon. Let's start with the major indices. The S&P 500 opened slightly lower today after a 3-day rally, but the question is, can this bull run hold? Analysts have been debating whether we're at the peak or if there's still more room to grow. With inflation slowing down and the Fed signaling they might ease off rate hikes, investors are feeling a little more confident. But there's always a twist. Job numbers came in weaker than expected, so keep your eye on how the market reacts to that. The Dow Jones is showing some strength, but it's being driven mostly by big industrial names. Think companies like Caterpillar and Honeywell. With infrastructure projects picking up both domestically and abroad, these stocks are benefiting from increased demand for heavy machinery. The Dow is hovering around 35,000 today, which is impressive considering where we were just 6 months ago. Meanwhile, tech is a mixed bag. The Nasdaq is still trying to figure out what's next after its massive gains earlier this year. Earnings season is about to kick off, and all eyes are on Apple and Microsoft. Both are down about 1% today, but with AI and cloud computing still being major growth drivers, these two aren't likely to stay down for long. If you're looking at tech, it's not just about today, it's about where the next innovation will come from. Now let's talk forecasts. Going into the last quarter of 2024, there's cautious optimism. Goldman Sachs is sticking with its call that the S&P 500 could hit 5,000 by year's end, but that would require steady consumer demand and some easing in the geopolitical tensions we've been seeing lately. That's a tall order, but it's not impossible. On the flip side, Morgan Stanley has taken a more bearish stance, predicting increased volatility as interest rates, even if they plateau, remain high. Higher borrowing costs are starting to impact corporate earnings, especially in sectors like real estate and consumer goods. We're seeing more cautious behavior in both sectors. So, what does this mean for you? It's time to be selective. The days of throwing money into index funds and watching them rise may not be as easy. If you're looking for growth, keep an eye on the companies with strong balance sheets and sectors that are still benefiting from long-term trends like clean energy and healthcare innovation. Speaking of healthcare, this sector continues to show promise. Companies like Pfizer and Moderna are making headlines again with new treatments, not just for COVID, but for other diseases too. Keep in mind, healthcare tends to outperform when the market gets choppy. So, as of today, October 9th, 2024, it's clear that the market's in a bit of a balancing act. There's potential, but there's also caution. If you're trading or investing, it's key to stay informed, be patient, and maybe keep a little cash on hand for any potential buying opportunities that could come if volatility picks up. That's your market update for today. If you found this helpful, make sure to hit that like button, subscribe, and turn on notifications so you don't miss any updates. We'll be keeping an eye on the market so you can stay ahead of the game.